Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so today we're going to talk about how the Las Vegas real estate market is changing because over the last really 2 weeks, we've noticed some big changes in the market, like some substantial directional changes in the market.
Right. So part of it is because we just got through the holidays and we're at this intersection of the old year, the new year, and we've got the Fed meeting again and all of this going on. But part of it might be something else.
Yeah. So what we're going to do is we're just going to show start with the first chart here. Now this is the market action index chart. You see this chart all the time. We show it to you. It's still a 32. Okay. What's interesting is this has not gotten worse in 4 months. Okay. The market action index has not declined. And if the market were crashing or substantially prices moving in a negative direction, this would be plummeting, and it's not. It's basically leveled off. Okay, this is correction. We've been saying this for the market would correct. I think we said back in March or April that the market would correct. Okay, but this is what I want to focus on. If you go read that little thing down on the by the red, it says the market remains in a relative stasis in terms of sales to inventory. So we'll talk about that first, then we'll talk about the rest of it. So sales are down. Everyone knows sales are down because that's all people talk about. Is they're talking about the percentage of sales down from last year, which is the hottest year. But inventory is coming down too.
Correct.
That's kind of the magic thing. So let's talk about that balance a little bit. What's happening? Like, why is inventory dropping if sales, like, it doesn't make sense. If less people are buying, shouldn't inventory be rising? That's not happening.
Well, less people are buying because there are less homes for sale.
Oh, okay.
So, when you only have a small amount of homes for sale, not a lot of choice, so you're going to have lower sales.
What happened in 2006? We were doing a radio show called Talk About Houses. We got to 26,000 houses in 2006. The decline of inventory didn't happen.
No.
It kept going up.
No, so it was the complete opposite of what it is now. Then we had a lot more supply than we had demand. Now we have kind of this weird equilibrium almost.
We do.
Where we don't have a lot of demand, we don't have a lot of supply, so they're kind of in balance, which is kind of a weird thing because, like we just said, inventory is pretty low. So low inventory, but also low number of buyers looking, balance.
Okay, I'm going to read the rest of this now. Prices have not been moving higher for several weeks. However, inventory is sufficiently low to keep us in the seller's market zone. So watch for the change in the market action index. If the market heats up persistently, prices are likely to resume an upward climb. Now that's an automated thing that this thing spits out based on data.
Right.
Okay, but we've done this. We've talked about AI. AI is going to get better at predicting these things than we will ever get because it can look at a lot of data and make non-biased opinions. But remember, you and I, we're just kind of data junkies. We just look at data.
Yes. We are data junkies. We do look at data, but of course, we have limited capacity of researching data and absorbing data, while an AI has a far broader capacity to deal with that.
Okay. The second thing that is notable, I'm going to put this up. Now, as you can see here, I've circled this 460 number. This is the median price of new listings. This means the new listings that have hit the market, and it's a 7-day number. So it's in the last 7 days, it medians that number out. But the median number in December of 2022, which was 2 weeks ago, was 440. It's now 460. Now, you could say that's noise. It certainly could be noise, 440 to 460. But it's unlikely to have that type of signal in a crashing market. Like, you're not just going to see, because we've talked about this before, if a bunch of people list their $1 million house, it can skew the market a bit. But this is not this is a measurable difference going from 440 to 460.
It is. So a couple things. One, I agree with you that it could be noise. I'm not sure it is. I don't think that there's that much of a jump in the market. I think what we're looking at is because the inventory is so low, even a small number of homes coming on the market will skew these numbers in this way. So I think that's something to kind of keep in mind. Now, I agree with you that this is not a sign of a depreciating market because like I said, even a small number of homes, do have an outsized impact because we have such a low inventory.
Okay, so let's talk about a market that is substantially depreciating versus one that was clearly overbought and is correcting back to what are still 30% higher home prices than they were 3 years ago.
Right.
Like, because 3 years ago, you wouldn't have expected if someone would, because the market crashers were saying the market's going to crash. And if you just said home prices are up 30%, they would have said you're crazy. And if you just said they went up, 38% and then back down 8%, they would have still said you were crazy, right? So what's the difference between a market that has a fundamental problem in it versus a correcting market? Like, what's the difference?
So a market with a fundamental problem has a lot more pieces that are going to weigh on it.
Okay, so like what?
So you've got maybe higher unemployment.
We don't have that.
We don't have that. We have maybe borrowers that are not well qualified.
We don't have that.
We don't
Everyone's
have
qualified
that.
that.
We have things in the economy that would lead us to believe that the economy will do substantially worse and that will impact jobs and that sort of thing. Yes, I mean, everybody's been talking about recession, but everybody's been talking about recession for some time. And that's kind of baked into the pie at this point. So I'm not sure that makes things move right now.
Okay, they told us the inventory would climb to record highs. I'm going to put up the inventory chart.
Okay.
Inventory is now crashing at a record pace that we have not seen in years. If you look at this chart, that dashed line, the difference between the 90-day and the 7-day average, inventory is coming down pretty darn quickly. Despite, now interest rates have come down too, but this clearly shows the cyclicalness of the market throughout the year. Okay, it goes and even in 2021, inventory rose and list prices tended to decline through much of the market, even though home prices overall were appreciating, because that's just cyclical. So I think people saw what was going to happen in the fall, and guess what? There was this 4-month window when there was a pretty good amount of inventory. So basically, October, November, December, and kind of January, it's kind of going away. That was your opportunity to go grab the house you wanted. That's gone pretty much, right? I think we said that back in June, that there would be this window of opportunity where inventory get high enough where you could get a deal. So what's going to happen in the fall or in the spring if inventory is dropping and people decide they want to go buy houses?
I think we're going to see competition and lack of inventory do their thing, and it's going to cause people to be in a position of multiple offers again. Multiple offers naturally mean a bidding process for purchasing a home.
Process.
And that bidding process, of course, gets to we're listed for this, we got 5 offers, we sold for this.
Okay. But what about the people that are just only harping on the one negative thing they can find, which is interest rates? So let's just say last year we had 8 offers for every listing, okay? And maybe 2 or 3 of those were needed like substantial financing. What's going to happen this year since interest rates are so gosh darn high? They're all the way at 6% and something, right?
Well, so a couple of things. One, you still have people with cash out there, so this doesn't make any difference to them. And number 2, you have everybody else who does need a loan. They're going to just have to adjust their sights. So if their pain point is the monthly payment, then they're going to say, well, before I could afford this, now I can afford this for the same monthly payment. Boom, I'm going to go ahead and go with this, and let's go.
Okay, so
they're still going to purchase a home because people need to live somewhere.
Okay, there are people that said the people that could afford the payment at $500,000 can only now afford a $350 payment, or let's say $350. And their natural assumption was that those $500,000 houses would all of a sudden go for $350 because that's what the buyers can afford. But you can't force the seller. Like, nobody's forced to sell.
No. So the reality of that is that those $500,000 buyers are now $450,000 buyers because they are negotiating right now a rate buy down from the seller. Now that is, if if things keep going the way they are, that's going to go away. So the buyers will actually have to buy down their own rates because sellers are going to be back in the driver's seat if we have multiple offers. Now, I don't know that we're going to have multiple offers, but looking at the chart, that there is a possibility that we will have multiple offers in the spring again.
Anecdotally, your current specialty for what you're understanding, like your view on the market, is more of a luxury market, like areas that you look at and that you talk to agents. Are you feeling or hearing more buyers coming in? Like, what are you sensing in that above $1 million?
They're buying homes.
They're buying homes. Okay. That trend is probably, I think is it that the recession didn't happen like they said it would, that the bad things didn't happen that they were told would happen, and they're just coming back in, right?
Well, I think they're like at any price point. They are people who need to buy a home because they need to live somewhere. So look, it doesn't matter if you're looking at $300,000, $700,000, $2 million. If whatever your price point is, and you need to live somewhere, you will be buying a home. That's it.
Okay, we're going to jump over to condos because when I normally don't look at the condos because we just try to fix on one set of numbers. But I went to condos to see what's going on, and I found two things that kind of surprised me. Actually, there's three things. So the first thing was the median list price. Now, the 7-day average is now above the 90-day average for condos in Las Vegas for all condos.
So that's really interesting. So what you're saying is that the list price, is it the list price or the sale price?
It's the median list price.
Median list price is higher for the last week than it is for the last 90 days.
Which means it's trending up.
It is trending up.
And it hasn't been doing that. It started trending down back in June.
Okay. So
and all of a sudden it's trending up.
That is interesting, but again, we have low inventory, so it doesn't take a whole lot of properties coming on the market to skew that.
Okay, and I did put up the chart and where it showed the numbers there. The 7-day average is 269.9, the 90-day average is 268. If you look at this whole chart, though, just keep in mind that the condo market there's more cash buyers. It's more of a less volatile. It's more driven by what rents they can get. There are more investors and there are owner occupants buying in here, but they tend to be lower income and more restricted based on income and things like that. So, and they're not as desirable, to one-bedroom condo in some part of town than a house somewhere where you maybe get more fluctuations. You also have more loan products for houses than you have for a lot of condos don't qualify, but every single family house, almost 98.5% should qualify for FHA or some kind of financing.
Right. Whereas
a lot of condos don't. Okay. The next one that we're going to look at here. Well, first of all, the property, the market action index is up. It's starting to go up. And there was a quote that basically said, if this thing keeps going up, then prices are going to go up. But this is what I found, that from December 30th, which was just a couple weeks ago, where the median price of new listings was $245, it's now $260. That's a substantial, now it could be noise, but that's, like I said, in a market that's being crushed. And we've been told this by people. We're watching it crash right now. This is like the worst. This is not like the Georgia TCU football game, which is complete destruction. This is like noise.
Well,
or it's either noise or it's the market's turn. That's why I think these, to me, are signals, because you had a bunch of down. Everyone first jumped on rising inventory. Then they jumped on, look at the numbers of price decreases we've had. Guess what's happened? The price decreases have started falling substantially. There's less of them now. So all of these things in tandem look to me like we turned the corner. What we said was going to happen, there would be a price correction over the fall, and then we're going right back in this crazy cycle. The only thing that's different is interest rates are higher.
Right.
Like literally between now and last year, the only thing that's different is interest rates are higher. Do you agree with that?
I do. I agree with that. It'll be interesting to see what happens, in a few more weeks, because I think it is worth watching. Because, like I said, I'm a little more cautious about this because there's such a low inventory. It doesn't take a whole lot of homes to skew these numbers right now. So I'd like to see a little more traction before I get excited that we've turned the corner.
What about the new home builders who have stopped building? meaning the number of homes being built today, the tracts, the total number of individual properties is far less than what was being built a year ago. And the forward-looking number is even less because they were still looking at building more a year ago, and now they're looking at, instead of an increasing trend of building, they have a decreasing trend of building new homes.
Right.
So how long does it take before that starts to affect the resale market?
I don't think it takes very long, actually, because once that inventory is depleted, there's not much to choose from. Kind of to that point, though, I was reading an article today, and they were talking about how the Bureau of Land Management, which owns all the land that you see around Las Vegas, they are considering selling to builders. I think it was something like, I can't remember. It was something like 1,000 acres, or I don't remember what the exact number was, but it was a good parcel of land, and the idea was for them to sell that off to allow for a new master plan community to be built.
Okay.
So I think that'll be interesting. If that does, first of all, it's a long process for the BLM to sell that land. They start out with public input, and they really want the public's input. And to prove how much they want your input, the only way you can give them your input is by snail mail.
Right. And master plan communities, I mean, Summerlin is a master plan community, and they've been building it for 40 years.
Yes. So, I mean, this is not that kind of size, but
okay.
But the point is that first they get through the public discussion, then they have the hearings. So it's a long, drawn-out process. So maybe at some point this year they'll go ahead and they'll sell the land. The builder or builders will purchase the land, and then they'll get going maybe sometime next year on what that master plan community might look like, and then maybe the year after that pull some permits, and so this is a down the road kind of thing. So if you're saying, well, okay, yeah, builders have kind of stopped building now, but they're going to build this thing, and it's like, well, I agree with you. It does look like this thing might get built, but even when it does, it's going to be years down the road. So it does not impact our immediate market.
Okay, what do you think is the next thing that happens that statistically makes a significant change in the market? We've already talked about the median list price is starting to maybe pop up a little bit, or not every week go down. We know the inventory is substantially starting to go down. What else do you see, or what else do you think would be a signal that says, hey, this thing is sort of turned the corner, at least in Las Vegas, or in theory that would turn the corner in any market?
Well, I think seeing prolonged price increases would definitely point in that direction, because we're already, at low inventory. So that corner was turned a while back. We're already at price increase, so that corner is kind of turned too. But now the question is that sustainable, or is this just a blip?
Is it noise?
Right.
It's just a mix of properties that are being transacted right now.
So I think, if we start seeing this maybe over 30 days, then maybe we can say, maybe that there's something to this.
Okay. Yeah, I think so. So this is, if you look at our video that we just did 10 days ago on Las Vegas market, these are some little corner turns. We did see inventory starting to go down, but now it's going down even more. And what we saw was the median list price is starting to level off, but now they've turned the corner and gone back up. And I didn't think this would happen until February, because our prediction was October, November, December, January would be the great months to buy, because there would be a substantial amount of inventory. But that amount of inventory is starting to go away. And I think that now there's this opportunity to maybe, like what Oana is saying, is you have had choices to buy, and now you're going to not have a choice.
You're not going to have a choice, and you're going to be competing for whatever is out there.
Right. And yes, interest rates are high, but you can always refine interest rate. Right.
And the minute that you have to compete for a house, the opportunity to have the seller buy down your rate is gone.
Yeah. So I think so. Anyway, I'll give you the final word, and you can close out the video then.
All right. Well, if you are new to the channel, please subscribe, hit the notification bell, like the video, share the video. Leave us a note and tell us where you're watching from. If you are one of our YouTube family, Thank you for being here. We appreciate you. Tell us what you think. Do you think this is noise, or do you think that there's something to this? You can tell I'm a little more pessimistic than Todd is on this video, but I like to see a little more data than this, mostly because I don't want to unnecessarily build people's hopes that we've turned the corner. So thank you for watching, and we'll see you on the next video. Bye.
Bye.